U.S. futures as well as stocks in Europe and Shanghai dropping today after China raises its interest rate by 25 basis points. For more on this story, we're joined on the phone by Don Straszheim. He's director of China research at ISI Group. He's in Los Angeles today, one place that it's not snowing like it is here in New York. Don, great to have you here. Let me ask you, first of all, was this a surprise, and was the timing interesting that it happened on Christmas Day?
Well, it was a little bit of a surprise, I guess, in terms of the precise day, Carol. But we had been expecting this for some time, and it's not over. And the reason it's not over is that inflation is policy concern number one in China. These commodity markets have pushed food prices up sharply. They're far more important in China than they are in America. So China is leaning against that, and they should do more, and I think they will.
They've been doing a lot already, Don, as you know, this year in terms of interest rates and raising reserve requirements for their banks. So talk to me about the level of activity you expect to see in 2011. We've heard from various folks, J.P. Morgan, Morgan Stanley. They expect it to be really front-loaded a lot in the first half of next year.
In terms of economic activity, Carol, I think you'll see the economy still quite strong throughout the year, with perhaps a small downward tilt, faster beginning, slower at the end. But we shouldn't worry about this rate hike. Inflation is up. China needs to fight against it, and they are.
Don, what about kind of the great policy divide? You look at emerging countries such as China specifically, or Brazil, where they're reining in their inflation, doing moves, raising rates and so on and so forth. Contrast that with what's happening here in the United States, rates still at zero. Does that provide problems going forward globally?
Well, the problem it really provides is that China doesn't like these zero interest rates in the West because they fear asset inflation. They fear money flowing in to benefit from these higher rates and to chase their appreciating currency. So you really do have a divide around the world. But it's a fact of life with slow growth in the West and with continued rapid growth in the emerging markets all over.
Don, got 15 seconds here. So bottom line, investors, what should be their takeaway from this latest move by China? And just quickly, if you could.
They should realize that this is an appropriate fight against inflation and that there are more hikes to come.
All right, Don, always good to talk to you. Have a great New Year. Don Straszheim.
Thanks, Carol.
Joining us on the phone.